Hey everybody, it's Tradiest Trades here, back with another COT setup markets video. I'm going to show you how I use COT and other fundamental indicators to determine which direction I think a market is going to go based on fundamental underlying conditions. This isn't trade advice. This is to be educational and for entertainment. I'm not very entertaining, but if you're a trading nerd like me, you'll find it entertaining. And also, I'd like to just give a shout out to the man, the legend, Larry Williams. He invented these concepts, which I use to successfully speculate in these markets. So I give credit where credit is due. So without any further ado, which market is set up this week for this setup markets video? Well, it's the Japanese yen. Japanese yen is set up for shorts. If you follow my channel, you know last week I showed you the dollar index is set up for longs. So this is kind of the same trade setup idea. I'm just going to show you the same analysis process applied to the yen. There are other currencies that are set up as well. I'm focusing on the Japanese yen here in this video because the Japanese yen is comparably weaker than the other currencies that are set up. The currencies that are set up in addition to this for shorts are the British pound, the Canadian dollar, the euro, and the Swissy. And the reason I am focusing on the yen is because it's comparably weaker. So if you go and look at a price chart, you'll see that the yen has failed to take out September's highs, while euro blasted right through them, Swissy blasted right through them, and the pound kind of took them out. I think I can't remember what it was. Definitely stronger than the yen. So the yen is comparably weaker. So if we're looking to short currencies, you want to place your bet on the currency that is the weakest. You don't want to pick the strongest. It's a misconception that people think that by picking the one that's been stronger, it has farther to fall. That's incorrect thinking. The stronger market will likely stay stronger for longer. Something that's been weaker should be weaker for longer. So that's why we're looking, or why I'm looking for shorts in the yen. And actually, I'll show you right here. I'm already short the yen. I got filled here on Friday on this qualified trend line break. That's my entry right there. My stop is 120% of the 3-period ATR added to my entry. That's the trade that I'm in. Will it play out? Who knows? But I do think over the next month or so, perhaps the next month and a half, things look bearish for foreign currencies and bullish for the US dollar. So that was a bit of a long preamble. So let's look at the charts and I'll show you my process for why do I think the yen is set up for shorts. So if you know my process, you're familiar with where I start, the commercial COT index, which is at the top pane here. The red line is the commercial positioning. So we see the first thing that I notice is that the commercials are extremely short relative to their last 26 weeks of positioning. That's code number one. Code number two is that a couple weeks ago we had very frothy advisor sentiment reading. So this is the advisor sentiment telling everybody that they know to buy yen. And when these people get extremely bullish at extremes, they're often wrong. This indicator pops in and out of that reading quite quickly, so I call it a hangover. It was recently up there, so sentiment has recently been extremely exuberant from the advisors. And we love it when that is juxtaposed or opposite of what the commercials are doing. When the advisors tell everybody to buy while the commercials are heavily selling, that is a nice setup condition. So there's two codes. Third code is valuation. So we see this third pane here is the valuation. Brown line is treasuries, gold line is gold, and the green line is the dollar index. So we see that the yen is overvalued relative to treasuries and the US dollar. And for currencies, we need at least two of these in the valuation extreme zone. So we have that. So there's three codes. So you'll notice that we already have three. We only need three setup codes to consider this market as set up. So that's enough to turn off the screen and walk away and say, I think this market's ready to go short if we get a confirmed trend change on the daily. So let's keep looking though, because there's more to this setup. So if we look here, something really interesting. This is the net positioning line of the commercials, and the green line is the small specs. And what's really fascinating is these guys, these are the dumb guys. You don't want to do what these guys are doing. They just got the max long they've ever been of all time. The last time the small speculators, which is the retail crowd that generally gets things wrong at extremes in the currency markets anyways, look at the last time they got this long. Wow, that was preceded a multi-year massive down move. So we're at the same level positioning from the retail crowd right now in the yen. So that's a really nice setup condition right there. And then if we take a look at open interest has been increasing for weeks, and so we see price has been going up. The black line at the bottom is open interest. So when open interest is increasing, we need to ask the question: who is driving the open interest increase? If open interest is increasing while small specs and large specs are getting very long, that is a bearish sign. That's a bearish setup condition. Basically, the market is being held by the weekends. These guys will flip on a dime as soon as this trend changes. So the open interest being controlled by these guys getting super net long, it's a bearish setup condition. Head over here and I show you the true seasonal. True seasonal is kind of weird looking on the yen right now, but generally I look at this discretionarily, in a discretionary way. I think that that's bearish. It's generally to go down until June. So we have bearish seasonal coming up for the month of May for the Japanese yen. So that's the setup. Those are the setup conditions. So next thing is, has this market been confirmed? What we go to the daily time frame to look for not only entry triggers but also confirmations to allow me to take the trend change triggers. So what I noticed is a few things. We had confirmation from distribution signs. So we had price making higher highs, while the on balance volume line here, just try to just move this. There we go. On balance volume was diverging from price. What this tells us is accumulation at these highs was not very strong. Or another way of looking at it is that it's being distributed up here. So that was a confirmation. Another couple things happened interestingly. We had confirmation from POIV giving a trend line break. So you see this trend line. We closed below it here. That in and of itself is a valid entry. And in fact, this is something that I've been back testing lately in the lab and I've been cooking. And this is something I'm super excited about. For if you get a setup market with confirmation of divergences or ADX confirmation on the daily or seasonal confirmation on the daily, these trend line breaks on these measures of accumulation and distribution appear to be absolutely incredible entry methods. And I'm just not ready to commit to it fully, but it's something that's interesting that I've been observing. But anyways, so we had that is a confirmation as well. We had trend line here on the Progo break, same day as that on the POIV closed, and that is in and of itself a beautiful confirmation. Then we also see here the daily Ponch index came up, and what did it get to? It got just about to 60. It didn't actually quite get to 60, 59.44. So if that would have got over 60, that would have been a confirmation. Technically, you need to wait for it to beat a 60. 59.44 is so close. But anyways, we had the confirmation from distribution. We also have the confirmation from seasonals to generally go down until basically end of May. So that's the setup, everybody. That is how I break down these markets, look at positioning, look at other fundamental underlying conditions to find a combination of things, a code, if you will, or a recipe to find several fundamental things pointing in the same direction. Then we go look for confirmation. Then we go look for entry on a trend change trigger. Lots of different ones that you can use. So if you like this video and you like COT analysis, or maybe you want to learn more about it, you can shoot me an email at tradiustrades@gmail.com. I have a free Discord where me and another crew of really great people interact every week. Throughout the week, I share all my setups for you to learn from, to see how I view the markets, how I participate in the markets, and learn from me and learn from the others in the group. So if that sounds interesting to you, make sure you send me a message. And I'll leave you with this. I've been reading a book called Bulletproof Trader by Steve Ward. Highly recommend you read that book. And there's an interesting quote in the book. Quotes a what is it? It's a Stoic quote, I believe, Stoicism, and it goes, "Success comes to the lowly and the poorly talented, but the special characteristics of a great person is to triumph over the disasters and panics of human life." It's really interesting to ponder that quote as a trader. Trading inherently has risk and uncertainty cooked right into the process, and risk and uncertainty naturally cause our bodies and our minds to experience stress responses. So going into the week, be aware that it's actually normal to feel stressed out in trading, whether it's the risk or the uncertainty, different things, fear of missing out, anger, disappointment, missing a trade, losing a trade. This is part of the process. We should not try to avoid those feelings by either not caring or by we shouldn't just avoid them. They're real parts of the process. Enter this week with an open mind, I guess, to embrace that part of your trading. And I did forget to mention one thing. In my group, I also release a weekly COT setup markets report, written breakdown of all the different setup markets. Basically, what I just showed you in this video in written form, so you can start to learn the language, understand the thought process behind what goes into finding markets that are set up for significant moves. All right. Appreciate you guys being here. If you like my videos, make sure you like, subscribe, and share with your friends. Hopefully get this message out to some other traders that could benefit from it. And I hope you guys have a great week, and good luck and good trading.